Hello and welcome to our first NFP report of 2026. The data which is going to cover, the data which is covering the last month of previous year 2025. Before starting, I have to mention that the political changes in Iran is continuing much faster after last night that millions of the people across the country they came outside seeking for their freedom. The government shut down the internet across the country, and the people inside Iran they have no access to internet. Not just they don't have access to free internet, they have no access to internet. They cannot connect to anyone out of the country through the internet. Even the phone numbers, the phone calls are they have some banned stuff and stuff like that. It's so it is so hard to connect with the phone through the phone calls. Right for Iran, we wish all the best for Iranian and for the Iran for the Iranian across the world, and for the Iran as a country that we hope that they can get their freedom as soon as possible and they can live freely in their own country. Uh, okay, let's get back to the economic data. While the tensions for sure, this political tensions for sure, it affect the energy markets, and that's how we saw that at the beginning of this today. We saw the market had a positive reaction. Oil market with increasing the oil above $58 at the first trading hours. Anyhow, let's go forward in checking the data first. As the NFP numbers, this the last month of 2025 and the first report of NFP report of 2026, and that's very important report as this after 2 months finally we have the NFP report which is totally covering the during the full number. When I'm saying the full number is because the previous two NFP that we had actually we didn't have an NFP report in October and November number that we had for October we didn't have it prepared numbers. For November also the numbers which published at the middle of December. It covers some part of the November also was holiday, some part of the data we didn't have an access. So anyhow, the previous two NFP numbers they were not a complete numbers, and we couldn't count on them too much. That's why after 2 months, that's the first full NFP report that the market. That's why the market they pay attention that to much more. At the same time, it's the last NFP numbers or main labor market data that we're gonna have before next Federal Reserve meeting, which is going to be in January 28th. Let's check the data. We have somehow a mixed data, but this mixed data is telling us that the labor market is in acceptable level. Average earning increased by 0.2% monthly and 3.8% annual, which means the people they gain fine and 3.8%, 3.9%, 4%. These areas the acceptable area and much higher than inflation. Inflation is around 2% and income around 3.8%. So it's almost 1% above the inflation, the people's income. So the real income is positive. Okay, that's a good number. At the same time, we can see the people's they're working less, 34.2 hours, less than 34.3 hours. That's maybe the support of AI. Anyhow, that's why if you saw it yesterday in the yesterday data which we had, labor market productivity increased. That can tell us that can explain why people worked less but gained more. At the same time, we can see unemployment rate fell to 4.4% from previous 4.5%. So the people working less gaining more, and unemployment rate is low, which means while market was expecting around 66,000 newly created job, and we saw only 50,000 newly created job. Now the unemployment rate is down to 4.4%, which means we have more people that working individually or they working for themselves. They have their own business, or even if it's not a big business or the company, they are just like as a freelancer or whatever that a traditional counting as an unemployment rate. They are counting unemployed, but in fact, they're working for themselves. That's why they didn't hire somewhere, but unemployment, but they didn't apply for to get the unemployment benefit. That's why we can see the number of the people that they're applying to receive the unemployment rate benefits is down to 208,000. And we can see this trend in the past several months, and I do believe that it's one of the positive effects of AI in a labor market. Anyhow, looking at the data, we can see, okay, we have more less lower unemployment rate, while we have less created job, but at the same time, people they are earning more, 3.8%. So at the middle, at a more just like detailed data, we can say, okay, we can see here 8,000 jobs we have lost in the manufacturing sector, but on the other side, in the government sector, we had 13,000 nearly employed. So generally, the data they are somehow covering each other, and we can say, okay, the balance is just like we can say natural with the positive tendency. That's we can understand from the data. So we don't have a good data, but we don't have a bad numbers. So we can say that the labor market is still resilience. Even it's not good, it's still resilience, can be accepted, or we can say it's in acceptable levels. That's what we can understand from the labor market data. Now let's check the charts and see with these data what we can expect from the markets and how the markets reacted to these numbers. Looking at the charts, we can see, let's start with that's the Bitcoin chart, but I want to start with the VIX chart. Let's start with the VIX chart. Here, the VIX chart, that's the VIX or risk market. We can see the market risk is still side movement, the natural. We don't have a high the risks in the market. We don't have a low risk in the market as well. While the market risk is above 16, it's still 16.26, and it's generally we can say high. It's not a high, as we can say higher than what it should be, but it's not so much high risk in the market. That's why we can see the demand for the safe haven is still high, and US dollar index positive generally in a bigger trend. The initial reaction of the USD to these numbers, it was, as you can see, it's a negative, but I don't think that is going to be the negative reaction. Generally, these numbers will support the dollar index to be able to save its, it can hold its gains that it had in the previous days. So the dollar index generally can stay above 98 mark, which is the positive number. Anyhow, if it happened for the dollar index, above 98 is a positive for the dollar index, which means that the dollar index can hold its gains. At the same time, for other safe havens such as the gold also, it's the positive. Even thought if the dollar, the first reaction was negative, but it can still recover and have a positive reaction. Gold had a positive reaction and can continue its positive reaction as well. Why? Because if the market can accept that more as a more signal for the more hawkish policies, it can be again step by step negative for the stock market. As you can see here, because the market with these numbers says that okay, we shouldn't expect any rate cuts in January, which is negative for the stock markets. And while when it's negative for the stock markets, it can be positive for the gold. That's why we can say whatever happens, gold is still the gainer. Still, the gold is a gainer here as the risk is high. At the same time, that can be negative for the oil. Never thought the market risk for now, geopolitical tensions for now, is still holding the oil in a buy opportunity, in a buy position, even though the general data are not a positive for energy market. As they say, we will have less economic activities, we will have less positive reaction in the stock market, and less demand for the energy. That's why with these numbers, at the same time, the gold, the US dollar index can be slightly stronger, which is again could be negative for the oil. That's why generally what I can see here, these numbers are positive for the bond yields, are positive for the US dollar index, positive for the gold, but negative for the energy market, especially oil. For oil and stock markets, they are natural with the downside tendency, natural and negative. Natural with the downside tendency for the general stock markets. For gold, for dollar and for both natural with the positive tendency. So why I'm saying the natural and with the positive tendency or natural with the negative tendency, because the numbers are not hugely good, or that they are not such worse numbers. So the numbers are somehow the natural with the positive tendency. Like we have less created job, but we have lower unemployment rate. We have less market participants, but at the same time we have more income, even though we have less lower work hours. So generally, the numbers are labor market data says that the labor market is in acceptable level, is a resilience. So for the stock markets, side movement, natural downside tendency. For energy market, natural downside. For dollar index, natural upside. For the gold, natural upside. For bonds, natural upside. That's what we can understand from these numbers. In the cryptocurrency market, well, usually last month we saw that event. We have the numbers that are positive in the US stock market when they're positive for the dollar index. Usually they are negative for the cryptocurrency market, and that's why you can see the Bitcoin again is under pressure. It sounds like still under pressure. In a bigger picture, the Bitcoin is still negative, especially if it again fell under 90,000 and hold the 90,000 lower than the $90,000. That can be said that okay, that's the time for the Bitcoin to think about again lower digits, especially if the price fell under 88. If the price fell under 85,000 US dollar. That's what happened in the market as it is, and how the markets, the financial market reaction. Hope it was useful for you. Talk to you again next week. Goodbye.